Bitcoin recently hit a new all-time high of 112,000, but according to ARK Invest's May 2025 Bitcoin monthly report, we're still not in a mania phase. That might sound crazy at first, but the data backs it up. In this video, I'm breaking down what ARK is seeing across the price action, institutional flows, macroeconomic signals, and on-chain behavior, and what it means for the months ahead. So buckle up. First, we're going to start off here at page 4, the market summary. Bitcoin gained 11.1% during May, continuing a powerful upward trend. Notably, it closed above the month above its short-term holder cost basis of $96,108, the 200-day moving average at $94,760, and the on-chain mean of $69,079. These are major technical and on-chain indicators, and surpassing all of these three signal strength and resilience in this rally. Importantly, ARK emphasized that the unrealized profits haven't yet hit manic levels, suggesting there's still room left to run. Bitcoin is showing strong momentum, hitting $112,000 with Bitcoin spot ETFs overtaking gold in monthly flows. According to ARK, this rally hasn't reached the irrational exuberance levels typical of a bull market top. That means, despite the price action, this could just be the middle innings of a longer trend. If we take a look at the news of the month, we can see here the macro and policy backdrop is turning increasingly favorable for Bitcoin. In the U.S., New Hampshire and Arizona became the first two states to pass Bitcoin reserve bills. Pakistan is also setting up a government-led Bitcoin reserve. Yes, an entire country also joining the trend. Meanwhile, Coinbase joined the S&P 500, solidifying crypto's presence in legacy finance, and it also acquired Deribit for $2.9 billion to expand the U.S. options market. All of this institutional momentum is definitely bullish. If we move here to the network metrics, we can see here on-chain signals remain net positive. Mining difficulty rose plus 3%. Miner revenue jumped plus 26%, and the long-term holder supply is climbing steadily. Meanwhile, time-weighted turnover spiked, a slight bearish flag suggesting some oldish coins are moving, but nothing indicating widespread capitulation. Overall, ARK maintained a bullish view on the network health. ARK also highlighted Bitcoin's fundamentals in both long-term and short-term valuation. The market cost basis rose to $46,665, up 55% year over year. Meanwhile, the short-term holder cost basis is also rising, matching the bullish trend. On the derivative side, both perpetual and quarterly futures basis metrics remain bullish, meaning traders still see upside. None of this suggests euphoria, rather it reflects continued conviction. Now moving on to pages 9 and 10, the technical analysis and ETF inflows. Bitcoin is currently sitting above multiple support levels between 94,000 and 97,000. ARK believes these levels could act as a floor in the event of a pullback. More importantly, the ETF flow data flipped in May. Now gold ETF inflows have dropped from $9.2 billion to $1.5 billion, while Bitcoin ETF inflows surged from $2.5 billion to $5.5 billion. That's a 121% jump. Institutions are clearly favoring Bitcoin over gold right now. Moving on to profitability levels. Despite price gains, the market hasn't entered full-blown mania. Unrealized profits are just one standard deviation above the cycle mean, far from the levels seen during past peaks. That means that people aren't taking profits en masse, and we're not seeing the wild speculative blow-off tops that define late-stage rallies. In short, we are still early according to ARK. Now, page 13, developer activity. This could potentially be one red flag. Bitcoin Core commits are at their lowest levels in over a decade, down almost 90% since 2021. But ARK suggests this doesn't mean Bitcoin is weak. Instead, it shows Bitcoin is becoming less experimental and more like a digital gold, which means a stable monetary asset and not an evolving tech protocol. It is definitely still worth watching. Now, as a reminder, these comments are modifications made to the Bitcoin underlying blockchain. Next, they talk about the mining economies. So even with the declining hash price, miners are still doing pretty well. Revenue per block remains stable, which counters the popular fear that halvings and rising difficulty make mining unsustainable. In fact, miner health is a signal of network resilience, and now it looks solid. Moving on to page 15 and 16. Macro backdrop. Zooming out, the U.S. economy is flashing warning signs. The housing market is flooded with sellers, but not buyers. Auto sales collapsed after a short-lived tariff-induced surge. And in the services sector, you can see here that input prices are rising even now as new orders fall, a dynamic not seen since 2007, just before the last big recession. This economic weakness could push the Fed into loosening again, and historically, that's rocket fuel for Bitcoin. All right, now moving on to pages 19 and 20. That's going to be the glossary of terms. Okay. Now going back here to the closing thoughts, I'm going to bring it back up here to the market summary. This is where we stand right now. Bitcoin is in all-time highs, yet indicators suggest it's not overheated. Institutional interest is accelerating, ETF inflows are climbing, and macro conditions are shifting in Bitcoin's favor. At the same time, legacy markets like housing and autos are flashing red. If ARK is right, this rally may still be in its early innings. Let me know what you guys think in the comments. Are you riding this wave or waiting for an even deeper pullback? Please don't forget to like, share, and subscribe this video if you enjoyed this breakdown. And remember, it's not financial advice, just a breakdown of some insights here from a very important firm and one of the respected names in crypto research. This is Cody the Coin Raptor, and I'll catch you guys in the next video.